Hi, this is Zak Mir with the technical week ahead and an interesting few days in the markets with the US shutdown and quite surprising really that there's been no credit ratings downgrade by S&P or Fitch or Moody's on the US. The GDP is going to tumble and no credit rating change at all. Interesting in that if it was Greece or Spain that had had a shutdown in the same way, I'm sure they'd be hacking into their bonds and giving them junk status immediately. Anyway, going on to the stocks for next week, and we've got Hargreaves Lansdown to start. Rising trend channel from February here, well above the 200-day moving average, indicating a good uptrend here. We've got the stock near the floor of the channel. There might be a little overshoot in the wake of the update to the downside, breaking through this line temporarily as we saw in June. But with the RSI support line there as well, you've got to give the benefit of the doubt to the upside and an £11 target. If you're cautious on the stock, an end of day close above £10, 8 pence, and the 50-day moving average would be the buy trigger. Also, next week we've got hedge fund manager Man Group in the picture. Terrible looking chart here over the last few months. We've had the sort of massive top here with gaps, unfilled gaps to the downside. It's just like an extended head and shoulders formation. Since then, failures at or below the 200-day moving average, which is now actually starting to tick to the downside. So that's also a negative. Falling trend channel from June, based at around 75 pence. So the best case scenario here is that the stock would find support around 75 pence and then sort of remain within this 75 to 90 pence trading range. But otherwise, we could see something pretty nasty heading back towards 60 pence on a weekly close below, say 70 pence. The 70 pence would allow for a little bit of leeway on the sell trigger front. Moving on to Carpetright, where at the start of the month saw a profits warning and the CEO heading for the hills. The current situation here is that we've got a massive, we had a spike to the downside and we then filled that gap. So we returned to the rising trend channel from April, and that gives the benefit of the doubt to the bulls, at least for this stage. The stock has in general outperformed expectations, tended to be stronger than people had thought, given the fundamentals, and this situation looks like it'll remain so. What we have now is support at the 200-day moving average around 653 pence, and while the stock's above that on an end of day close, there could be further gains towards the 700 pence, the main resistance zone. So cautiously optimistic on that situation, if only because of the bear trap below £5.80 at the start of the month. Next up is BSkyB, the pay TV giant, and this is by far the strongest chart of the week that we have as far as the larger companies are concerned. We had a golden cross buy signal between the 50-day and 200-day moving averages, an extended RSI support line here running through around the 50 level, the neutral level, and we've just had a bounce off that, as indeed we've had a bounce off the floor of the May price channel at £8.54. So the setup here is that we would go long with an end of day close stop loss below the 50-day moving average, and the target here, well, as much as £9.50. We're looking for the type of move that we saw going into the start of the year, where the shares put on around £2. So fresh strong move to the upside expected over the rest of the autumn. Finally, the token small cap, and this is Lombard risk management, where you can see that we have a bullish situation here, given the rising trend channel in place on the daily chart over the past couple of years, since the summer of 2011. There's also sustained price action above the 200-day moving average, which is at 10 3/4 pence. And we've also had a sort of sharp bear trap recovery from April, which took the stock out of the rising channel and then back into it. Those situations tend to be extra bullish, extra positive. So the view now is that any weakness towards the 200-day line that can be regarded as a buy opportunity, and we are targeting on a 3 to 6 month time frame as high as 16-17 pence, given this strong setup. So looks like a good situation once, of course, the update's out of the way and any uncertainty there is taken away. That's it from me. See you next time.